Hi there, this is the last video for chapter 5, and in this video we study multiple step income statements. Actually, we briefly introduced it in the last video, talking about the income statement. We talked that the first line of the income statement is sales gross minus sales return and allowance and sales discount, getting the sales net. Indeed, the multiple step income statement distinguishes cost into several components. That is, so far, the income statement or single step income statement, we have seen distinguished expenses from sales, expenses from revenue. And then, just difference between these two is called net income. But in multiple step income statements, you distinguish the costs or expenses into different categories, such as manufacturing cost, which is often called as cost of goods sold, and then operating expenses, and non-operating expenses or others. Okay, and then you subtract out income, tax, expenses, and then if there are any, you adjust for discontinued. And then the end line is your net income. Okay, we distinguish costs into these different categories so that we can give investors information of different types of profitabilities, different measures of profitabilities. Sales is one of the measures of the profitabilities. But when you subtract manufacturing cost from the sales, that measure of profitability is called gross profit. And you subtract operating expense from gross profit, then that's called operating income. And you adjust for other losses, gains, expenses, and revenues, then it's called income before income tax or pre-tax income. And then from that, you subtract out income tax, then it's called income from continuing operations. And then you adjust for the discontinued operations, then you have finally net income. Okay, so the typical examples of operating expense includes sellings, general, and administrative expense, or R&D, research and development expense, and the like. Others, interest expense or revenue. Are included in the others, or gains, one-time gains or losses are included in others. Income tax expenses, income tax expense, right? The others, you have pretty fair, good idea about them. Then What are they? You can say that this is your profit after only taking out manufacturing cost, right? I often see some news reports that argues the cost to make one iPhone. How much is an iPhone? Usually, say $1,000, right? About $1,000. I often see some news reports or analyst reports that argues the manufacturing cost, the cost to make one iPhone is only $300. The cost of the chip, the cost of the camera, the cost of the screen, and the like is only $300. Then what kind of cost is this news writer or analyst is mentioning? It appears that the analyst is mentioning about only at manufacturing cost, and then tend to argue that after taking out $300, Apple is making money of $700. When the news writer is saying like that, the news writer is having gross profit in mind. Okay. But is it fair? By the way, I'm living in Manhattan, New York City. In New York City, you see tons of, wall advertisement go to the Times Square, you see Apple's ad, right? Marketing, advertisement, right? Sales commissions, right? It's humongous. And what about R&D? R&D is told as the horsepower, right? That leads the economy, right? Without R&D, we may not have seen, right? We might not have seen something called iPhone, right? Companies are expensing a lot of money to do the research and then make better products, right? These are costs that are ordinarily, right, being expensed to operate their regular business, right? Sort of essential part. Yes, operating income is sales minus cost, manufacturing cost, and taking out the operating expense, you have operating income, right? After taking out your core costs, then what does this mean? Income before income tax. You take out all of the, right? Maybe one time, right? Maybe not permanent, but you take out all of the changes, right? Then you have this income before income tax. Yeah, we cannot ignore the tax effect, right? That's the profitability. After taking out the tax effect, you have income before continuing operations as a profitability measure. What if there are some discontinued operations, right? Business perspective is not good, so you decided to close your business in certain area, right? Or certain business, right? Then you have net income. The conclusion is we have several 1, 2, 3, 4, 5 different measures of profitability, right? And which one shall we use is the key. Well, it depends on your decision. As an investor, which one do you think you are interested in? Right? Why don't you have a look at a real world case? Again, go to the Edgar website, and let's have a look at an example of how about ExxonMobil, right? The oil industry. You remember that during the past years, when oil price was good, the industry was booming up, but the oil price reached up like several years ago to $100, but it dropped to last year, 2020, during the corona, it reached to close to zero, right? The change is crazy. You open a income statement, then you will see something like, multiple step income statement. From sales revenue, you take out all of the oil related costs, and then you take out SG&A, right? Selling and general and administrative expenses. And then you take out interest expense, and then you take out the tax and the like, right? All of these components are not as well arranged as this multiple step income statement, but it provides essentially all the information so that you can build up a nice, looking nice income statements and calculate all of these different levels of profitability. Okay, let's have a look at real world case, and the case that I think this time can be interesting is, how about Keynes? Kraft, did I say Keynes? How about Kraft Heinz? And let's open their income statement. Then you can see it presents a nice income statement that begins from net sales, cost of products sold or goods sold, right? Gives you gross profit. And from gross profit, you take out selling general and administrative expense, together with goodwill impairment, intangible asset impairment, excluding impairment losses, and then including impairment losses. Then you have operating income. You take out interest expense. You have other expense. Interest and other expenses and the like. Then you have provisions for income tax, meaning income before income tax, and then you have net income, right? So but we have only 3 years of data. If you want more years of data, then you can utilize something like Bloomberg Terminal. And let's search for the terminal for Kraft Heinz. You type in the ticker KHC, then you can see that, oh, here is the company that I want, equity. And then you will see the balance, the statements. Let's click financial analysis. Oh, this is sort of too small. Okay. And then IS means income statement. Then you have the raw numbers, but what I want to see is percentages, meaning percentage of, for example, gross profit to the revenue. Okay, you click here, GAAP. What does that mean? Generally accepted accounting principles, percentage. Then you see that sales up 100% over the years of 2014 to 2020. And gross profits are 35% to 30. Operating income 15 to 23 to 8. Wow, a lot of fluctuations. Pre-tax income, income from continuing operations, income including minority interest, meaning Heinz Kraft is owning some part, not major, but minor interest, minor portion of another company. In such a case, you include the I cannot say subsidiary, but the company that you own, the revenue from the company that you own, and then net income is here. Okay, so if you want to analyze, easier way, then you can export it to Excel. It takes time. Okay, then why don't you have a draw a graph of the different level measures of profitability? If you have too many graphs in too many line charts in one graph, then it can be hard to understand. So let's have a look at only 1, 2, gross profit, operating income, and finally net income gap. Yeah, let's have a look at these 3 lines, and maybe 4 lines. Pre-tax income. Okay, and then go to insert, click chart, and scatter plot. Something like this we have, but it indicates they are series 1, 2, 3, 4 instead of gross profit and the like. Click one of the lines, then you will see that the first argument is missing. The second argument is C5 to I5, which is the legend, right? Which is the horizontal axis, right? And then the next argument is C10 to I10, which is the Y values, right? Vertical axis values. And then one should be the format. Okay, meaning the missing argument is the labeling. Right? Click. Okay, so it's changed to gross profit instead of series 1, 2, 3. Then the next series, you click it, and then you see that it is about net income. Okay. And another series, okay, it is about operating income. Another green series, okay, it is about pre-tax income. Okay, what do you see here? Right. Again, from 2014 to 2020. Wow. Together with the net income, which is the purple, right? Well, one may say that net income is the bottom line, meaning the most important, right? After taking out all of the expenses. But if you include all of the changes and expenses, then you see that the net income fluctuates a lot. Wow, wow, wow. Relative to net income, the two others, operating income and pre-tax income, they are relatively stable. Or more stable is the gross profit, right? As an investor, what do you want? As an investor, what kind of profitability do you want to use? Right? But by the way, accounting is, by definition, it is backward-looking data, right? Again, 2014 to 2020. There is no information about the history, about the future. It's not forward-looking, right? As an investor, when you want to see whether a share price of what's this company? Kraft Heinz is overpriced or underpriced, so that you can make a decision of buy or sell, right? You need to incorporate all of the information, both of the backward-looking and forward-looking, right? Accounting is by nature, it is backward-looking, right? You need to fill out the forward-looking, the future information, so that you can make a investment decision, right? Then, what kind of data is helpful in making forecasts about the future? Do you think this line is helpful, or this purple line is helpful? If you make a forecast based on the purple line, then shall we forecast that next year it will go this way, or as it fluctuated, it will pop up again. We have a little idea, right? But if you make a forecast based on the gross profit, then we can say that, oh, it is somewhere here, will be, right? Or in between, like, shall we choose, instead of net income versus gross profit, shall we choose something like the green line, pre-tax income or operating income, the red line, right? They are relatively more stable than net income, but not as gross as gross profit, right? So it is up to you, right? The bottom line of this exercise is, again, it is better for investors to have this classified or multiple step, different levels of profitability, so that investors can make a choice, right? Okay, that's the end of chapter 5, and see you in chapter 6.